Hi traders and welcome to the Technical Analysis Market Wrap on Friday the 26th of January. So I've seen some really good moves in the market this week. The US 500 is at an all-time high and we are in the middle of earnings season. So let's jump into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD. And we can see that we've got 4 or 5 big indecision candles in a row. We can see these big wicks that have tried to push through the 66 cent mark. It looks obviously a very strong roll reversal zone. It has been for a long time. You can see right through here. You only have to zoom in and see how far all of the support levels here have held up, and it's no real surprise to find that being resistance at this point here. So we know it's a very important zone. Hitting the 20 and 50 moving averages, or very close to, is proving to be a resistance point for it as well. So there are multiple reasons why we're failing here, and obviously the 20 and the 50 moving average are about to cross, so we've got to be very mindful about that as well. If we see a low, look, the easy way to play this one really, it's all about scalping. You set your zones up. We've got the 65.50 mark and also the 66.20 mark really. If you scalp inside those two zones, you can go to the smaller time frames and look for opportunities. You can go to say 15-minute chart. You're going to see obviously opportunities hitting the 20 moving average and moving in either direction. So no real surprises there. That's been working pretty well. All the things we talk about each week. But really what you've got to be looking for is making sure that those zones are inside the playing zone for your scalps. So you don't want to be looking for outside moves until it actually does break through. So take profits at the highs and the lows of that zone. When we do get a daily close eventually past that 66.20 mark or below the 65.50, then we're going to look for an opportunity to actually go lower. Then we've obviously got the 65 flat and also the 66.80 really is the next resistance zone for the Aussie. So play inside this zone here for now, and when we do get a daily break out of there, then we look for the bigger zones on the outside, but good scalping opportunities up until that time. All right, we'll move over to the US dollar CAD. And look, it bounced beautifully off the 20 moving average. You did exactly what you needed it to do. Obviously hit the resistance, came back, hit the 20 moving average, and hopefully you were able to get that move. It's what we talk about all the time, the pullback to the 20 moving average and the easy trade straight up to the previous touch zone, which is around that 135, 20-ish. Anywhere through that zone would have been fine. It's obviously a support and resistance zone as well, so it's a roll reversal zone, and it obviously got hit earlier, last week. So really, it was a very, very easy trade. Hopefully, you're able to get hold of that. Look, now we're really waiting for it to see if it can actually break through and push past that level. It needs to, in order to go all the way up to 136.50, we're going to need to get a daily close above there. Before we even look like trading that, we want a daily close above that 135.50 area. If we get that, the momentum is set to continue, and we'd be looking for opportunities to get up there. So look for pullbacks to a smaller moving average on the smaller time frames, obviously the 1 hour or the 15-minute, and look for a gravitational pull up to the 136. But if we do reverse here, I wouldn't be looking at shorting opportunities unless it breaks the 20 moving average. So unless it's trading under the 134 sort of 20 area, then we're not going to leave or not even going to look at the short. We don't really want to be playing in that zone, and we know there is support there as well. So until it breaks down past this level, we're looking at longs only, and we're only entertaining the short really if we get a close below the 134, and then we're going to start looking at that sort of 133 20-ish area as the point of support. So pretty good trading on the CAD. US dollar yen, you've been really, really good. Obviously hit the target for us last week, the 148.50. Great place to take profit. It did it several times. It's been scalping through there. Smaller trades have been able to get in and out of that one. It hasn't been too bad. Look, right now, it came back down. Yeah, it did test this support zone here, only just very briefly. It needed to be very quick to get it at around that 146.70, and then it sort of bounced right up. To me, it's right in the middle of a zone where it's difficult to find a trade unless you get a very good sequence of higher highs and higher lows for an up movement to try and break that resistance at 148.50. I would probably err on the side of waiting for it to break. It really needs to make a decision as to whether it's going to continue. It's kind of stuck in the middle of nowhere at the moment. If it comes back and touches the 20 moving average, and this zone here around that 146.50, then I'd be looking for maybe a reversal, but I'd want to see a double bottom or a rounding bottom at the very least on a smaller time frame around here. and then we can look for a push up to the 148.50. But I wouldn't be looking for longs right now. I'd be waiting for it to either come back down here and round bottom at the 146.50 or break through the 148.50 with a daily close, and then we can look to the higher markers at around the 150. But it needs to do either of those two things to get me keen on this particular trade. If it gets back up to the 148.50 and fails again, I'd be maybe looking for a series of lower highs and lower lows on a smaller time frame, but I'd be trading that with caution because it's a pretty strong uptrend, and any trades that you're going to do on the downside would need to be very short and sharp at the moment to make sure that you don't get caught in the crossfire. Over to the dollar index now, and look, it's looking like it wants to really break up higher. It's still found resistance at this point here at the 103.50, but no question, there is an area here where if we do get a break, the 104 sort of 15 to 20 area is a likely scenario for it to get to. Obviously, the euro is the one we really want to be talking about here because that's what we're going to trade as the inverse, but it's certainly showing signs that it wants to break through. Still has failed to do so. We need to see a daily close above that 103.80 before we start to get keen on a real solid short on the euro. But we'll go straight to the euro now. And look, it really wants to break this zone. And if it does, the move down to 107 is a relatively likely scenario because that's where the next real strong support is. There is a little bit of support here at that sort of 107.50, but really 107 is probably where the stronghold is. It's looking a little bit weak now. Look, we've obviously got a series of lower highs and lower lows. You can see that now. This is the daily chart. And the 20 and the 50 are bearing down on each other. So they're both containing price, and they're looking at a cross, which is nearly imminent. So we've got to be really careful with this one. But we still need to see a daily close below 108. If you get that close below 108 on a daily, then I'd be looking for trades down to the 107, and there's not a lot of traffic there. Maybe a little bit at 107.50. That's probably where you want to set your break even. But apart from that, I'd be looking at a 107 move if we get a continuation of this weakness. But the daily has to close below 108 for me to get keen on this because it is a very strong level where it is currently. All signs point towards the fact that the weakness is there. But obviously it still needs to do it. But we've got the lower high, lower low sequence. I wouldn't be looking at long opportunities unless it was trading above these moving averages again on this one right now. So it might be a bit different next week if it is trading somewhere inside this zone. But for now, probably looking for that weaker opportunity. Unless it turns around and gets above the moving averages, then we'd look at it from a different lens. All right, now we'll have a look at the S&P 500. All right, so obviously new high again, new all-time high at the 4,900. It was going to be difficult to actually see it not do that. Once it got so close, it does gravitate to a nice round number, especially on a move that is setting new highs. Look, we are, like I said earlier, we are in earnings season, so you've got to be a little bit careful with how you play this one because earnings can really knock around the market. Obviously, they've been reasonable so far, but they do need to, when we've seen a market move so big and so aggressive, they do really need to shoot the lights out and perform very, very well for this to continue. So I would be a bit careful around here. It did all the right things off the 20 moving average, obviously. We had the doji candle there. Market is not, it's not quite closed yet, obviously. So we've still got a little bit of work to do before the US market closes. But this candle, again, has sort of pushed up to the 4,900 again, rolled down about 15, 16 points, and is trading currently somewhere in the middle of its range. Look, it's one of those ones where I'd be watching now. If we see a little bit of weakness on the smaller time frames and you start to see a series of lower highs and lower lows, I'd look to maybe get it back to around that 4,800. You can see here, it's a good resistance zone from where the previous peaks were. And it's also around the 20 moving average. That would be a pretty good target to go to. If we start to see weakness in tonight's session, the Australian market's obviously closed today because it's Australia Day, but in the US session, if we see a bit of weakness kick in, it is certainly possible that it could sell off down to that level, especially if we get a couple of results that warrant that. But I would be trading the shorts, pretty sharply because, obviously we're in a very, very heavy and aggressive trend up. So I would not really look for long opportunities until it actually breaks the 4,900 and tests it from above. I don't really want to be the first person there. I'd rather it test the 4,900, break through, come back and test it from above, and then look for a rounding bottom. That would be the preferred trade going longer. But if you see any sign of a smaller time frame, lower high, lower low sequence, that 4,800 would be the likely target because that's where it would more than likely gravitate to. And we do know that there's very strong support there. So I hope everyone's had a great week's trading. Look, it's been really, really really big on the markets. Obviously, with new highs, the market starts to get a little bit excited, but it is also a time to keep your trades in check and make sure you stop losses and you take profits in line with what the market will give you, not really with what you want. So just be careful with that one. Hope you have a great weekend. I look forward to seeing you next week.